Hi, I am Aarish Ali from Section D, and I'm gonna throw some light on the withdrawal of foreign investments from India, the economic implications, and the road ahead that we have here. Um, Imagine waking up to the news that billions of dollars are fleeing the Indian stock market. Investors are pulling out their money, stocks are plummeting, and the economy is under pressure. Now, this is not fiction, it's actually happening right now. In the last few months, foreign investors have withdrawn nearly $29 billion from the Indian stock market. The result, a 13 percentage decline in stocks and almost a 1 trillion loss in the market value. But why is this happening? What does it mean for India's economy? And more importantly, where do we go from here? Let's try to break this down a little bit. India's stock market was once it was a darling. It was a darling for foreign investors, but now the tides have turned. According to a Reuters report that I read, since October 2024, foreign institutional investors have aggressively sold off Indian equities, citing concerns over high inflation, rising interest rates, and slowing economic growth. Even worse, this isn't just about numbers on a screen, it's hurting the common investors. A separate report highlighted that retail investors are fleeing the heat with household wealth eroding. Consumer confidence has been shaking. For example, the two-wheeler sales, which is a key indicator, economic indicator, has dropped by 9% in February 2025, which reflects a very weak consumer demand. To add to India's woes, many of these investors are now redirecting their funds to China. But why? Because Beijing has rolled out aggressive economic stimulus measures, making it a much more attractive destination. The Hang Seng Index surged 36% in the same period, while Indian markets face sell-off. Now, there is some strong correlation there. Let's try to understand why this sudden outflow of capital is happening. Here are some of the key reasons. One, interest rates and inflation. So the US Federal Reserves and the RBI have both maintained high interest rates to curb inflation, which makes debt markets more attractive than equities, pushing investors away from Indian stocks. There's also a slowing down of the economic growth of India. India's projected GDP is expected to be at its slowest in 4 years, which has been leading to investor concerns, right? The third reason is stronger competition from China, of course, with China's economy recovering post-COVID. Foreign funds are moving there because of better opportunities. And also, the Indian market has become expensive. There are valuation concerns prompting institutional investors to just cash out and take their money, take the bank to China. So, has this been like this always? No, it wasn't like this. Just a few years ago, India was one of the hottest investment destinations from 2020 to 2024. Now, this was post-COVID. We saw all of those unicorns happening in India come out of India. So, foreign investors put billions of dollars into the Indian equities, betting on a very fast-growing digital economy, a thriving stock market, and very strong domestic consumption. But this surge in investments, it helped India's Sensex and Nifty indices reach record highs. It boosted a lot of wealth creation and economic activity. But as always, what goes up must go down. And now we're now facing a reality check. So it always happens in cycles. There's the highs and the lows, and right now we're in the lows. So what does this mean for India's economy? One, the market volatility. As the foreign institutional investors, as they exit, the domestic investors will have to face heavy losses, which leads to reduced spending. Two, the rupee is under pressure. Large capital outflows, it weakens the Indian rupee. We learned that a lot in IEP this term. So it's making imports very costlier. Three, investments in startups and businesses. So if the foreign investors they pull out, funding for Indian startups and businesses may shrink, slowing down innovation and expansion. Now, what is the government doing at this point? India is just not sitting idle. The Reserve Bank has assured that India's macroeconomic fundamentals will keep remaining strong. The government is also focusing on one, strengthening the domestic demand to counterbalance the capital flight. Again, capital flight is something that we learned about in IEP. We had a question about capital flight. It's when capital leaves the country to other destinations. So we're trying to strengthen domestic demand. We are focusing, we're encouraging long-term investment incentives to attract global funds back, and also we're enhancing our infrastructure spending to boost investor confidence. So what lies ahead? Where do we go from here? While foreign investment may be fleeing right now, India still holds strong long-term potential with its young workforce, rapid digital adoption, and resilient domestic market. The fundamentals remain strong. However, the short term could be a little bumpy. So, what can we do as investors? Stay informed and remember that markets move in cycles. The capital outflow may be alarming, but it also presents opportunities for those who can just get through with it, just weather the storm. Only time will tell where India emerges. Will it emerge stronger than before from this phase, or would it not? Until then, stay informed, stay invested, and keep an eye out on the economy. So this is the economic reality of India, but tomorrow is a mystery. It's yet to be written. So what do you think about this foreign investment crisis? Let's discuss in the comments below.